My video title today is Trade Like a Pro and Copy These Winning Trades for Massive Gains, and I'm going to show you what I'm buying and selling in this current market and how we're consistently making money week in and week out. I know my channel could get more views if I talked about the debt ceiling like these guys, but ask yourself this: do any of those videos actually help you make money? I would rather take the time to show you trades and strategies that you can copy and use to make consistent gains, and that's exactly what I'm going to do today. And real quick, let me tell you how the debt ceiling negotiations are going to play out. Number one, prior to the deadline, the debt ceiling will be raised and the government will spend more money that it does not have. Number two, prior to the deadline, both parties will blame the other party for the delays. Number three, once a new agreement is reached, both parties will claim the victory. This is Politics 101, and neither party wants to go down in history as the party that caused the U.S. to default on its debt, because that would be an economic catastrophe. Ultimately, a deal will be reached and life will go on. So rather than talk about a potential catastrophe that is not likely to happen, let's focus on making some consistent profits and putting money in your account. As always, if you appreciate my no-nonsense, straight-to-the-point approach, make sure to drop a like and subscribe and ring that notification bell if you want to learn more from my channel in the future. Our first trade today is Crocs, and I call Crocs the ugly shoes I would never wear, but the truth is they are a very profitable company with a 15.2% profit margin, and they have multiple branding partnerships with companies like Minecraft and Coca-Cola. We're currently running the wheel strategy on Crocs, and we currently own the stock and are selling covered calls. I've owned this position on Crocs since May 4th when I was put the stock at $120, but my cost basis is only $110.85, and that's because of the premiums I've been collecting from selling puts and covered calls. Today, I have $120 covered calls expiring, and I expect Crocs will close below $120. But just for the sake of argument, let's say Crocs closed over $120 and the stock was called away from me. If that happens, then I will make $915 per contract, and that works out to a 185.5% annualized ROI. This is a real trade I have going on right now, and the power of the wheel is that I can make almost $1,000 per contract, and I'm buying and selling Crocs for $120. Let that sink in, because without the wheel strategy, I would have made nothing. Now, let's go over the chart and I'll show you a trade you can consider making right now. We're now looking at the chart on Crocs, and we can see for the last 4 months, Crocs has been trading sideways, and I've got support drawn on the chart for you here. It's at $113, and we've got resistance at $131.50, and for those interested, this yellow line is called the point of control, and this tells us where the big money is positioned. Now, anytime I can get in close to the point of control, that's normally a good thing, and right now we're below that. So a good thing to consider would be getting in near this support level of 113. So let me show you a potential trade that we could consider. Now I've dropped over here to trade, and this is the options chain, and what we want to look at is the May 26th, which are just 1 week away, and here you can see a position that I have, and the put price is $111. We can see that the bid and the ask is $120 and $140, so you could consider getting into this for right around $130, or the last price was $135, and that would be a put to consider, just like the example that we went over, and this is another current position that I have. And as long as the stock closes above $111, we would get to keep the entire put premium. Next up, we have Tesla, and they're having a pretty good week after a positive Tesla investors meeting that covered the Tesla truck going into production this year and gave some positive updates on full self-driving and the Tesla bot Optimus, which is transitioning from curious sideshow to an impressive robot. Elon stated he believes that a majority of long-term value at Tesla will be derived from the Optimus robot. One of my favorite strategies is to sell cash-secured puts on companies that I want to own. A cash-secured put is an income strategy to use when you are willing to acquire stock at a discounted price. When selling cash-secured puts, you receive an option premium and the obligation to buy 100 shares of the stock at the given stock price. The Tesla put is deep, out of the money, and likely to expire worthless, meaning I keep the entire premium. The downside is if the stock crashes, you could have to buy at a price much higher than the current price. Now, last week, I sold a Tesla May 19th $160 put and was paid $160 per contract. Since Tesla is trading well above $160, these puts will expire worthless, and my annualized ROI works out to 45.9%. Now, the key to selling cash secured puts is to know which delta you want to sell. When I sell a 0.3 delta, I almost expect to be put the stock, which means I have to buy 100 shares at the agreed upon price. But if you just want to make income, you can sell at a lower delta, for example 0.1 to 0.2, and the likelihood of being put the stock is much lower. Now, let's go over which puts you might want to sell right now. We're now looking at the chart on Tesla, and a couple of things to point out. They've got a revenue growth forecast of 22.4%. We can see we've got a little bit of support down here right around 153. And one really cool thing, if we look at the momentum dream indicator, you can see we just went green on the top one. We had a squeeze and it just fired, and this can often be a good time to buy. And we also picked up a buy signal on our JR3 as well. And I wouldn't be surprised if we pick up a buy signal in the next day or two if it goes up even just a little bit. But let's go over and look at the options here, and we want to come in and look at the options 1 week out, which is going to be the May 26th. And then if you remember, we just talked about focusing on the delta for what we might want to sell, and we'll be looking at the 0.3 all the way down to the 0.1. Now, the higher the delta number here, this is negative 0.3, the more likely you are to be put the stock. So the 0.3 would be the 172.50, and we can see Tesla is currently trading at 176.89, and Tesla being a very volatile stock, that's quite possible we could be put that stock. So if you wanted to go a little more conservative, you could go all the way down to the 0.1, which would be the 162.50, and there you'd be picking up a premium of 63 to 68 cents per share, which is $63 to $68 per contract. And you can see I just have a recent position here that's currently the 0.13 delta, and it's going for right now $88 to $91 a contract. So if you want to play it on the conservative side, focus on these lower numbers, maybe the negative 0.1, negative 0.13, and that's where your safer money is going to be, because the likelihood of Tesla going from 176.89 all the way down to 162.50 over the next 7 days is not that strong, and based on the delta, you've got a 90% chance that you get to keep the premium. In a worst case scenario, you would have to buy 100 shares at 162.50, which would be $16,250. So you've got to be prepared for that, and if you do a cash secured put, make sure you've got the cash to cover it. Otherwise, you can turn it into a put credit spread. Now, I know not everyone can afford to buy 100 shares of Tesla, and there's an easy way for small accounts to make money selling puts. All you have to do is turn this into a bull put credit spread by purchasing a put with a slightly lower strike price. While you will not make as much, you can still profit on these trade alerts, and that's why I include the note to small accounts at the bottom of the trade alert. Selling puts on stocks you want to own is a very profitable strategy, so definitely consider this. And for smaller accounts, consider bull put credit spreads. And since I've been talking about bull put credit spreads, let's quickly go over one I have open on Nvidia. On May 10th, I sold the $270 put and bought the $265 put to create the spread. The expiration date is May 26th. My break even is $268.80, and Nvidia is currently trading at $316.78. My maximum profit is $120 per contract. My maximum loss is $380 per contract. Now, the profit odds, historically 94%, and I get this from Market Chameleon, which is one of the sites I use, and I've got a link for that down below if you're interested. Now, on this trade, I expect to make a maximum profit of $120 per contract. Let's look at the charts, and I'll show you a trade you can consider making right now. All right, we're on the Nvidia chart. We can see they've got a revenue growth forecast of 10.2%. Now, a word of warning, they are reporting earnings on May 24th, and anytime you hold over earnings, that's going to be higher risk. So you've got to make a decision whether or not that's something you're willing to do. Now, on the plus side, other chip makers have been beating expectations, and I would expect Nvidia would do that as well. However, you never know, so please understand that risk. In looking at the chart, we can see they have been trading sideways for the last 2 months. We can see the point of control is right around 265, 266, and we've got a little bit of support coming in right around $261. Now let's look at a possible option that we could trade. So we're going to come over to our option chain, and right now it is the May 19th, and we're going to go out 1 month as an option. So let's drop into the June 16th, and then what we want to do is we're going to come down here. Let's be on the conservative side, and if we look at the 265 265 strike price for a put, we can see the 265 has a delta of negative 0.10. So that means that the market makers are saying there is only a 10% chance that NVIDIA comes down below 265, which means we've got roughly a 90% chance that this would be profitable. So to do this as a spread, what we're going to do is sell right here on the bid side, the 265. We're going to sell that, and then we're going to buy the 260, and that creates our bull put credit spread for a 63-cent credit. And let's just go over the numbers here to confirm them. What have we got? Our break-even price is $264.37, so we would only lose money if the stock traded below that number. Our maximum profit is $63 per contract. Our maximum loss is $437 per contract. But again, remember, our delta is very low, so this is a high percentage trade on our side. Of course, holding over earnings, always that extra risk. And then the question is, how many do you want to do? For each contract, you're risking up to $437, and I'll probably do a few of these myself. These are some of the winning trades and strategies we're using that you can copy. And it doesn't matter when you are watching this video because these strategies are timeless. And even though the markets have been trading sideways for the last few months, you can see these strategies are cranking out consistent profits. Remember, success in trading doesn't happen overnight. It takes dedication, continuous learning, and implementing proven strategies. With the right mindset and the knowledge you've gained today, you're well on your way to achieving your financial goals. As always, have a phenomenal rest of your day. Subscribe to the channel if you haven't already, and grab your free stocks from Moomoo and Webull. And don't forget to try my indicators for absolutely free. The links are down below, and my trade alerts are in my Discord. Thank you so much for watching. I'd love to see you back here on Monday, Wednesday, and Friday. Peace and have a great weekend.